MMT makes taxes super simple to understand. Taxes are necessary, and they're necessary for 3 reasons. Taxes create buy-in. That means they create value for our currency. Taxes stop, prevent, and control inflation. And taxes help us achieve our policy goals and objectives. Taxes create buy-in because our judicial system requires us to pay them in US dollars with a threat of legal repercussions if we don't. This causes all of us to have a sincere and legitimate reason to care about the dollar. Taxes take money out of our economy. This is used to prevent, stop, control, or even reverse inflation. Broad inflation occurs when we put too much money in our economy without taking enough back out. Collected taxes actually delete money at the end of every year by subtracting it from our deficit or national debt. We have the power to choose to increase or decrease taxes every year on a year-to-year basis. Taxes can also create incentives or disincentives for things we deem good or bad for society. For example, we can increase tax on things like nicotine to discourage its use, and we can decrease taxes on things like solar panels to encourage their use. Taxes can also be used to ensure everyone's purchasing power is protected. This is fundamentally necessary to achieve the maximum potential of our economy as a whole. If undesired inflation does occur, we have short and long-term tools to stop, prevent, control, or even reverse it. In the short term, the Federal Reserve can raise interest rates as high as needed to control the rate of inflation through the end of the year. In the long term, Congress can raise taxes so we can take a higher percentage of the money spent into the economy back out. This reduces the additional or even total overall amount of money in our economy as a whole. If undesired inflation does not occur, then there's no real reason to raise taxes. In fact, we could actually lower it. However, this is in direct proportion to how much money our government is currently spending into the economy. One of the jobs of our financial system and our government is to increase the overall private wealth and overall living standards of all our citizens as strongly as possible. It is for this reason that broadly cutting taxes is not necessarily more beneficial than increased spending when inflation does not occur. There's also the issue of optimization, including what do we tax and how do we optimize it. For one, taxation needs to be universal so that every American has skin in the game. We also want to maximize the total percentage of money that currently circulates within our economy. Billions of dollars being traded on stocks in the stock market is one thing, but those same stocks are trading on companies that represent real people, real products, and real services that are the very backbone of those stocks in the first place. Real people and real work exist prior to stocks, and no stock would exist without them. Taking money from the real economy and putting it into the stock and wealth economy causes the whole system to become more restricted in its ability to achieve its full potential. Protecting the full purchase power of the people prevents this restriction. There's another element within our tax code that must be monitored, minimized, and controlled. This element is called spillover. Spillover occurs in our tax code because we have different types of taxes and income that apply differently to different people. As an example, we have an income tax rate, a corporate tax rate, and a capital gains tax rate. Because these target different sets of finances, a direct incentive is created that aligns with whichever rate is the lowest. When capital gains rates are the lowest, people try to restructure their pay so that it includes a lot of stocks and bonds. When corporate rates are the lowest, people try to cover higher portions of their expenses and incomes through corporate spending accounts set up through their employer. Likewise, when the income tax rate is the lowest, people try to maximize the amount of money that they are paid directly. Spillover can be measured and corrected. This makes tax optimization simple. Minimize spillover. When explained in this way, taxation is fundamentally a very easy concept to understand. Tax everyone universally. Tax in a way that ensures 100% of the population has enough purchasing power to stimulate the economy. And optimize the tax structure by minimizing spillover. That's it. That's everything we need to understand the truth about taxes. Thanks for watching Real America. And remember, keep talking about it. Peace.